Hello, Thinkscript scholars. This is Clarence Carr. Today, I want to continue with our multi-part series regarding creating a market forecast strategy. Today, we're going to do part two. Last video, we did the definition or defining the strategy using a study and basically marking up the study so that we could decide when we wanted to take our trades, to get in and to get out. And so that was the part one of this. Now we're going to carry this on to part two and how to create the strategy. So I want to point out that this really is not being set forth as an ideal strategy, although I think it's a fairly decent strategy. But the purpose here is to show you how to think through how to set up a strategy and how to define your own strategy, set up your strategy, and then ultimately we will try to cover how to compare your strategy to other strategies, as well as how to create a scan that will find underlying ticker symbols that meet the requirements you're looking for, such as buy signals. So we're going to move forward with this. This basically is a study shown here on this graph. We're going to switch over to SPY that exemplifies what we did in our prior study. These markings up down here are on the market forecast study. We've taken the market forecast study and basically marked it up to our liking, and we're going to do most of our trades based on what the green line is doing, the intermediate line. I call it the green line, although at times in this particular study we mark it where it's red and sometimes gray. Red, of course, meaning if it's in a downtrend, or gray meaning it's neutral. And we typically won't take bullish trades when it's not green, basically. So bring that back down some. Now, we can take this study and we can look at it here. And I want to show you how basically you can bring this study in and turn it into a strategy. So the difference between the study and the strategy is that a strategy actually can, once you've brought that into your chart, you can use a floating profit loss on that, and it will calculate what your profit and loss would be at any time. And I usually look at a 3 to 5 year window back to decide whether this looks like it would have been a good strategy, at least over that period of time. Of course, future results are not predicted by past performance, so we always have to keep that in mind as well. But this still gives us something a little bit more concrete to go on when we want to start thinking about what strategies we should use, or what strategies at least look like they have some potential for being profitable. So we can just take and click on this and select all. We can take and paste it over onto another chart. I'm going to come over here. What we would do to create a strategy now is, now that I have that on my clipboard from the study we did last time, we can go over to strategies and we can create, and we can paste this over here. Now I want you to, first before I paste this, I want you to see that strategies also come preset up with a very basic add order command. Now you should know that this add order command does not actually create an order for you, even in real money. It's not a true order that is placed on the exchange. This is merely a virtual order. So when you do these studies, you're not actually buying or selling any actual stock or ETFs. You're merely telling the computer, let's do a virtual trade and see what would have happened over time. So we can bring this in and Control V. Whoops. Maybe I didn't get it copied the first time. Let's come back over. Control A, Control C. All right. Come back over here now. Create. There we go. So we can copy this in, and that's really our starting point for where we're going to go. We're going to take what we had, and we're going to mark this up a little differently and make this work. Now remember, this study was declared lower And of course, what we want to do is show this up on the price subgraph, so we'll be taking that off. So what I've done is I've created a Excel spreadsheet that I think shows this somewhat more clearly. And I'm going to bring this over here. I'm hoping it's going to display itself a little bit better than it is right here. Let's see if we can get this to work. Let's back that off. We'll just cancel those changes out because I'm actually not going to use those right now. And let's see if we can bring Excel up. Okay, here we go. There. Now what I've done in this Excel spreadsheet is I have put these two studies side by side so that we can see where the differences are from one to the other. The study that we did previously is right here, MFC underscore long, and the strategy we've created from this is over here on strategy 3x long MFC. Now the reason we've already said that we call this 3 times long is because we've decided that we're going to take 3 attempts to get in. We'll give ourselves 3 different the first 3 signals, I should say, to get in. We will go ahead and take, and we will put on a trade. And if we get an exit signal, we'll exit all the positions we have at that point. That's just how this strategy is set up for demonstration purposes. Now, what I've done here is I've taken the code, and on this side of the chart here, I have put in the initial study, and then just as I copied it over a minute ago into the strategies, I brought it over here, and then I have amended it. So I think it's helpful to look at these side by side and see what's the same and what is different. If you see this pinkish color here on the background, that means that that line was changed. For instance, declare lower had to be taken out of the second study here under the actual strategy because I don't want it to be a lower study. There actually are some changes here that I could have marked up as far as the name goes, but that's really just because one is a strategy, and I like to include the term strat in the name. That makes it basically to remind me that it's a strategy. You will find oftentimes that if you save a strategy, if you open up a new study and try to create a strategy in a new study, nothing's going to happen except you will have, if you have any plots, they will show up. But otherwise, your buy and sell orders aren't going to be placed on a virtual basis. Okay, so this line has not changed. The line 4 hasn't changed on either study. And we notice that line 5 remains the same. Still, the neutral percent is going to be 2. We still are going to have 3 opening trades in a row. But then I have added some additional lines over here on the strategy. I want to be able to calculate what my costs are of getting in and out of the trade. And down below, I'll have a section where I actually count how many times I enter a trade over a period of time and how many times I exit the trade over a period of time. And I want to give the user a place here to put in what their costs, their commission costs are per trade, basically. And in general, I think TDA is charging about $6.95 right now for most people, although I would encourage you to negotiate with him on that price. I was able to get a significant discount. Personally, I do some fairly heavy trading, but nonetheless, that's worth talking to them about. So then I also have decided that whether or not I want to show the virtual trades or not, what the trade size will be. Here we're going to always buy 100 shares of whatever it is every time in this particular strategy. That can be changed, of course, to meet your needs or desires. And in fact, it could be, you could set up a strategy where it changed each time depending on what signal was being met. But for our purposes, we're just going to leave it at a 100, and we're going to just tell the program that we do want to see the statistics that are created towards the end of this. Okay. So those are the changes so far between these 2 studies. We are always going to close after one sell signal. This is a long strategy, so selling will close our trades out. We still want to show the label, and we'll display that for comparison. Then we have our little boilerplate stuff here, and then we start with the the market forecast. So once again, we bring in the market forecast, but notice that in the prior video, we wanted this to show up in a study down in one of the lower panels. So we were plotting I at that point. Now here we don't want to plot I, but we want to know where it is. So we're going to define I equals to this value, just as we plotted I equals to this value over here. We want to define I neutral just as we did here. So these two basically, once again, these are both defined statements because you weren't plotting this on the initial study. Now, you have to take out all these right here. Actually, I should have highlighted all these. Actually, I didn't. These are all different, obviously, here from on the right-hand side because you cannot set these values for a defined value. Those are only for a plotted value. Okay. Again, we're going to plot where we plotted in before. We're going to find in. That's the near-term line. Again, we remove all these other basically properties for n that tell the programming in Thinkscript what size the line should be, what color it should be, how it should display, etc. We don't need endpoints. As you remember, we were showing in the initial study, we showed the number of points that were above 50 because we wanted to show those in blue so that we could easily count whether there were 7 to 12 days or bars that were above 12 to help us determine our posture. But that won't be necessary here. We won't actually be needing those points because it's not visually helpful to us here. Plus, we'll still keep this other study down at the bottom on our chart, so we'll have it for reference. Finally, we have the momentum line, which we're going to define here. We just defined it once again. We're not going to plot it as we did over here. And again, we don't have to set up any of its properties. And finally, we don't need to show when m is at an extreme because that's already going to be shown at on the graph below that we developed. And so in our study for up above, that won't be necessary to reference or to set up. We still need to find the trough values of I because we use the values when I bounces back up from a low point, then that's one of our trade signals to get in. So we need that so that we can develop our trade signals. All right, we're going to come down here to the actual signals. These signals are basically almost the same, except you will notice that on the lower chart version, we always assign the value that was defined to I in each of these. I made it bigger here. That's why I'm using Excel to show you this because I can kind of show you, line up my code line by line and compare it easier. And all these were I. But in this case, when we show a buy here, we want to have an arrow, say, right below the low of the candle that day. And these buy signals will be really only, they really aren't a signal until the close of that day. And so you'll see down below that we really can't or shouldn't take a purchase on that until after the close of that day, which with this programming means that you will be doing it at the open the next day, although in reality you could perhaps do a after-market hours trade or one very near the close as long as you are comfortable that you're going to continue to get your signal that day. So when we sell, we want to have an arrow at the high. So that's why we're changing that from I to high. And then we finally, remember this was the bullish confirmation buy signal, and we still will use that, but we're going to have the little arrow show up at the low of that candle on the upper graph. This will be on the price graph. Over here, what you see on the right in the gray, this will be the strategy that we're looking at, and it will be displayed on the upper part of the chart. Okay, so we do all the same counting that we did before. All these stay the same. I'm looking down here to see if anything else changes. I don't think anything else of significant changes. We still plot the buy signal, the sell signal, and the bullish confirm signals. And then basically this black bar across here indicates where things become completely dissimilar. On the initial study, we were setting up some clouds to color in the upper reversal zone and the lower reversal zone, and we also had some labels to tell us what the conditions were in the market. But in the strategy over on the right-hand side of your screen, we're going to start putting in buy and sell orders. So first of all, we're going to use this add order command. We're going to add the order. The order type is buy to open because this is a long strategy. And this will occur if virtual trades are to be done and if there's a market forecast buy signal, okay, MF buy. Now, we will open one bar to the right, which means on the open of the following day, we will place the trade. This is a virtual trade again. It's not a real trade, okay? The trade size is, however, in this case, we're doing 100. So we'll buy 100 shares, and we'll show the tick color is a dark green. The arrow color that we'll see is a dark green, and I'm going to put a name there which says buy entry, okay? Then we'll have another time we can get in, which is the bullish confirmation signal. And this will, again, will be true or place an order if virtual trades are showing and if bull confirm is true. That's from this statement right up here, okay? Again, we color this, and we want to name this differently so that we know this is a bull confirmation signal. So I just put a bull plus entry. You don't want these labels to be real long. They start going over each other on your chart. And finally, we have a signal where we can get out. Order type is sell to close, virtual trades. Again, we do this on the open, and that really should be a -1. We'll have to change that when I pull it over. I guess I can do it up here. Let's see. Well, that's not going to be that easy. I'll wait till we get back into the other editor. I will definitely try to remember to change that. That should be -1 as well. Okay. Then we come down to some definitions that I've done. Remember, I said there were going to be some statistics, and I'm going to take and move this over because we really want to see the rest of this right now. So from here on down, this section right here is all about the statistics that we're going to display in labels and give ourselves some idea of what the results of all this trading has been. And once you see this on the graph, I think this will all start to come together for you. So we're going to define the total entries equals to, if this is bar number 1, then there are no entries. We kind of initialize our variable that way. And then if show buy, and if market forecast buy signal is an actual number, or the bullish confirmation buy signal is an actual number, then we take our prior total entries and we add one to it because we just had another entry if one of these is true. Otherwise, if one of these is not true, we just bring forward our prior number of total entries and just carry it forward to the next bar. We do the same thing for our total exits, basically, only we're, of course, looking at the market forecast sell signal, and then we tally up, keep a running total of our total exits. This basically bar count is for displaying how many years we've been in, and it really is only set up for days or weeks, so it will tell you how many weeks. It's a reminder of how many years you're looking back. That's not really necessary because that's actually already shown up by tossed charts, but you can have this calculation done for you here, where if it's at a daily period, then it's going to look at about 245 days per year on average. If it's a weekly chart, then it's going to look at 52 weeks per year. Now it takes and calculates total commissions right here. So it takes your cost per trade that you entered up above, if you recall, up here, right there, takes that cost per trade, and if you're not dizzy now, you're still with me. It multiplies this cost per trade times the total number of entries plus the total number of exits, because that's assumedly the price you would have to pay to get in or get out of the trade. Now, also, I define a floating profit loss, and I use the FPL to do this. This again is not complete. It's a bit redundant, but I like to have that number so that I can calculate my net, which is my floating profit loss minus my total commissions. Then I add some statistics and labels showing the year history that was calculated from this aggregation statement here. That's where the bar count right there comes in from that bar count statement there. And then I look at total entries, total exits, trade size. I use my stats to add up my floating point profit loss. Gross minus the commissions equals the net. We add a label that shows net profit per entry. And I like to look at some numbers. When we get to comparisons, you'll understand this, looking at the net divided by the first close. In this strategy, if you're always buying 100 shares, obviously if you buy 100 shares of GE or USO, for instance, it's much different expectations than if you were to buy 100 shares of Amazon or Google. This is a way to kind of bring those numbers into comparison when you're comparing across from one stock to another to see where you would have made the most money. This basically takes your first closing price and it divides your net at the end by that first closing price so that there's some adjustment at least for that price performance. Of course, if one has gone up strongly over the other one, it's not completely perfect. It might be better to do the first close minus the last close, divide by 2, or some average of the closes over that period of time would probably be a little bit better way to do this. But this is how this is set up for now, and it's adequate at least for demonstration purposes. Then I like to show what the maximum would have been on that ratio, and the minimum would have been on that ratio, and we plot this out. So I'm going to take now, and I'm going to select all of this like that. I'm just going to copy that. Remember that I've got to change that closing to -1 so that it's the next day instead of today, or yesterday actually. So Control C. Let's close that out. Maybe I can get Excel to save. I don't know. We'll just save that real quickly. Hopefully it will close out of our way here. I'm not sure why my computer's having a hard time displaying. Yes, I want to say what's on my clipboard. All right, so now we're going to go back over here. We're going to create a strategy. We're going to take that I just copied off the clipboard, off the clipboard. We're going to take this name right here, and we will paste it up here. Then there was one of the orders that I needed to modify, and it was this one right here. Okay, let's select OK. Let's see what happens. Okay, now you can see that we're showing where we have bullish confirmation entries. All this is coming through from just like it was before. It tells you where you're at, and here's where the virtual trades chart showing up. Now notice that our signal is here, but the actual entry occurs the next day. Okay, so the signal that TOS puts on from the actual order occurs the following day, but our signal occurred on the close of this bar, but the entry or exit in this situation does not occur until the next day. Okay, now let's here's where the magic comes in my opinion. You can see up here, first of all, that we've had some profit. If we'd done this on a weekly chart for the last 5 years, we would have had, after our costs, we would have had almost $20,000 worth of profits. We would have had 16 total entries, and total exits were 9, with a trade size being 100. We can look at our net profit was $1,245 per entry. And net divided by first close is $125. That's, again, is mostly for comparison, as are these two. These last three are all kind of predicated on the the closing price at the beginning of this time period. So that's how that's done. Now let's go. There's another study that we will want to add, and it's called floating PL, floating profit loss. And this is really where the magic of this kind of comes in my book. So we can see over time on a weekly chart where we would have been, how our money would have built up over time on this chart. We can do this on a daily basis as well. Let's go to 5-year daily. We didn't make as much money if we traded on a daily basis, and we did a lot more trades probably. I would say we did 86 total entries. So, and 56 total exits. Let's go back to weeks and see. In this, we did 16 total entries and 9 total exits, and we made a lot more money too. About 3 times the money almost. So there's quite a bit to be said for using weekly candles, it seems. We've kind of learned that from some of the other trading advice. For those of you who are, like I am, members at marketscholars.com with David Settle and Brandon Van Zee. Brandon does a good deal of his sector trend trading based on weekly candles. And this seems to support that idea. Now you say, okay, well, that's SPY. Good. Everybody knows SPY has gone up. Let's look at some other options. Certainly not all of these are the same, but I'm probably pushing it on this, and I haven't checked this ahead of time, so I might embarrass myself here, but let's see what happens with GE. See, it's amazing. Even with GE, with this strategy, you would have made some money. It looks like you had a little rougher go on the start, but you would have made a little bit of money even with GE on a weekly candle over the last 5 years. I think that's pretty impressive. So it's not such a bad strategy, although I think this could be improved. Now, hopefully the forthcoming videos that I will be doing will be showing how we can tweak these studies a little bit. Maybe we say we want to make it a decision that we want to get in whenever the intermediate line on the market forecast goes above 20 or goes above 50 or goes above 90 or goes above 80. That's a very fair alternative method, or we could kind of combine the two where we say, okay, I want to get at all those points and or anytime it bounces, and I'll still take the first 3 trades. Now, there is one thing that's very important when you're setting this up in your own charts, because it's not quite as straightforward. Well, what I've done so far is straightforward, but there's one other adjustment you have to make, and that will be down here under Global Strategy Settings. You will have to set this up to allow up to, in this case, 3 entry orders in the same direction, regardless of the entry that generated the order. Default trade size for entry orders is 100. Now, while this is the default, our program can override this number here. So if you wanted to make it in the program be 200, it could still be 200, and it would override this portion. I don't put that on to automatically display. I always just bring it up myself, although you could click that, and then this bottom graph will always come up on these strategies every time you do one. So you've got to be sure and go into Global Strategy Settings and set those up as I have them here to make this work. Okay? All right. So that should be fun for you to play with a little bit. And until I get a chance to do the next one on this, happy Thinkscripting, happy trading, and I hope you have a wonderful day. Thank you.